Hey everyone, Larry Bailey here for another weekly newsletter. This one is to review the week of May 13th, 2024. Today is May 20th, 2024, and here's what's happening. April brought cooler than forecasted consumer inflation, which was welcome news after the first quarter's more persistent readings. Meanwhile, confidence among home builders, it declined, and new construction activity was softer than expected. Read on for these stories and more. The first story is friendly consumer inflation number, followed by the next story of revisions, the real story on wholesale inflation. The next story is home builder sentiment hammered lower. The next story is housing starts, permits lower than expected. The next story is flat retail sales, start of a slowdown. And the last story here is watching trends in jobless claims. Before we get too far, I want to first of all thank everyone for listening to the podcast along. We appreciate your replays. If you ever want to see the full video with everything sharing on screen, head over to mortgage.community. It's an open community for everyone who's interested in anything related to the mortgage industry. Go ahead and go over to mortgage.community. It's free and it's helpful. So let's get into that first story. Friendly consumer inflation number. We've got a graphic on screen. This is courtesy of the Bureau of Labor Statistics. And the latest consumer price index, that's also known as CPI, showed cooler than expected inflation in April, with a headline reading up 0.3% from March versus the forecasted 0.4% rise. On an annual basis, CPI eased from 3.5% to 3.4%, which was a move lower in the right direction, of course, following that uptick that we had back in March. The core measure, and that strips out the volatile food and energy prices, that increased 0.3%, while that annual reading declined from 3.8 to 3.6%. The rising shelter, gas, and motor vehicle insurance costs were key reasons, most likely, for the pricing pressures that were seen last month. Bottom line here, gang, is the Fed has been working hard to tame inflation, hiking its benchmark Fed funds rate, which, as a reminder, is the overnight borrowing rate for banks, 11 times between March 2022 and July 2023. These hikes were designed to slow the economy by making borrowing more expensive so the demand for goods would be lowered, thereby reducing pressure and inflation. While inflation was making good progress lower late last year, readings throughout the first quarter of this year were unexpectedly high. This has caused the Fed to uphold the Fed funds rate steady as they take a more patient approach to cutting rates than initially they thought they would. April's cooler than expected readings were a welcome sign that inflationary pressures may continue to ease as we move further into the year. So we will have to wait and see. This next story is revisions, the real story on wholesale inflation. So the producer price index, that's the PPI, that measures the inflation at the wholesale level. That rose 0.5% in April, coming in hotter than estimates. The core PPI, which strips out volatile food and energy prices, was also above forecast at 0.5%. So what's going on here? On the surface, these monthly figures look like they had like a significant rise in monthly wholesale inflation, but a deeper dive into the data tells a different story. Revisions to the previous report for March showed inflation was tamer than initially reported for that month, with both the headline and the core readings revised lower from 0.2% to negative 0.1%. That's a huge difference. It's like difference of everything. Plus the year-over-year figures, 2.2% headline and 2.4% core, came in as expected and in line with what the Fed wants to see, meaning the report wasn't as concerning as the headline figures suggested. So we'll have to see what happens here. This next story brings us over to home builders. So the home builder sentiment hammered lower. And there's a graph on here, and we've been following this graph now for a long time. And it's just a reminder that confidence among home builders is measured, and it's quite impactful. And at this time, it fell back below that key break-even threshold of 50 per the National Association of Home Builders, that's the NAHB, as their housing market index dropped 6 points to 45 in May. Any score over 50 on this index, which runs from 0 to 100, signals more builders view conditions as good than poor. Among the three index components, which are the current and future sales expectations, those both remained in expansion territory, but they fell sharply in April. The gauge judging buyer traffic also declined, remaining in contraction territory. So the bottom line here is the NAHB's chair, Carl Harris, explained, quote, "The market has slowed down since mortgage rates increased, and this has pushed many potential buyers back onto the sidelines," close quote. He added that builders are concerned about some recent code rules that could lead to increased costs, which also impacted sentiment overall. If you don't really know what that's talking about, so when you build a house, obviously you have building codes, and there's a lot of effort across the country. This is my own personal commentary. There's a lot of effort across the country to really get into these building codes and to try to make it easier to build more. And every area has its own set of codes to worry about. So it's not like you can have one set of uniform codes across the entire country necessarily, but builders are talking about building codes and the costs that they add to building homes. That's something that's come up over the last several weeks. If you're interested in that, I suggest following that story that has been talked about. Here's the next story that we're on for the week of May 13th in review here. So housing starts and permits lower than expected, and we've got some new home construction figures here, and this came to us courtesy of the U.S. Census Bureau and HUD. Housing starts rebounded in April, rising 5.7% from March, though coming in lower than economists had forecasted. However, starts for single-family homes, which make up the bulk of home building, are the most crucial due to buyer demand, were essentially flat at a 0.4% decline. There was a similar trend in future construction, with building permits moving lower despite much-needed supply. Bottom line here is, while housing completions did rise in April, softer than expected construction activity this spring could limit much-needed supply down the road. This bodes well for appreciation and shows the opportunities remain to build wealth through home ownership. Not sure I connect those two dots by that story, but that's what they're saying here. I think what it's really talking about is if builders don't give more supply, then home prices will increase because there's fewer supply and the demand's not going to go away. It's kind of a stretch on that story there, MBS. But I know what you're saying, but it's a little bit hard to put those two sentences together. Here's the next story. Flat retail sales, start of a slowdown. So there are signs that consumers are reining in their spending, as retail sales were unchanged from March to April, which is not a bad thing, quite honestly. Sales in March were also revised downward from the originally reported 0.7% gain to a 0.6% gain when compared to February. So what's going on here is that the pause in spending last month was a miss on estimates, as forecasters had predicted a 0.4% gain. But with credit card balances reaching $1.12 trillion with a T at the end of the first quarter, per the New York Fed's quarterly report on household debt and credit, and pandemic-era savings fully spent as of March 2024, per San Francisco Fed analysts, a slowdown in discretionary spending is also not surprising. The Fed will be closely watching retail sales reports, as the strength of our economy will also impact their monetary policy decisions this year. So watching trends in the jobless claims is the next story. And here we are seeing initial jobless claims falling by 10,000 in the latest week, as 222,000 people file for unemployment, receiving benefits for the first time. Continuing claims rose 13,000, with 1.794 million people still receiving benefits after filing their initial claim. So what's the bottom line here? While initial jobless claims declined from the previous week, they remain in breakout territory above the low levels that were recently reported, ranging from 208,000 to 213,000 in 9 of 10 weeks before the last two reports. Continuing claims also still trending higher and near some of their hottest levels we've seen in recent years. The data follows other recent reports that suggest a softening of the labor sector, such as weaker than expected job growth in April, declining job openings, and the low quit rate that we've talked about before here. If softer employment data continues, this could pressure the Fed to cut Fed funds rate, given their dual mandate of price stability on one hand, but also maximum employment on the other. So see what they do. Gang, if you are a barbecue person or a barbecue family, there is a great recipe here that talks about the delicious recipe of grilled vegetables. This is courtesy of the Food Network. I want you to get to this recipe. Head over to mortgage.community, scroll down to about the 9-minute, 45-second mark, and you'll see all about the family hack of the week for this delicious grilled vegetable recipe from the Food Network. Thanks, Food Network. Here's looking at this week. Housing highlights include April's existing home sales on Wednesday and new home sales on Thursday. The latest jobless claims will also be reported on Thursday. Plus, the minutes from the Fed's latest meeting will be released on Wednesday, and a parade of Fed speakers throughout the week always has the potential to move the markets. I could not agree more. My name is Larry Bailey, and if you can ever have a need to find out more information, head over to mortgage.community and check it all out there. Thanks very much. Take care.